Welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny. Today I'm talking with J Mintzmyer. Jay, thank you very much for coming on.
Yeah, Marius, thanks for the invitation. It's good to catch up with you again and talk about the latest in shipping.
Yeah, so tell us what's going on. I mean, it's been like a year since the oil tankers trade has been, most popular, and right now I feel like it's very interesting setup. Yet nobody's paying attention. What do you say to that?
Yeah, well, a year ago, right as we started to get into the COVID lockdowns and we had the OPEC price war. I mean, it was short-lived, but it was a bit of a price war. Tankers were the trade of the day, right? Everybody was all about the oil tankers, and myself included. I was bullish on a handful of oil tankers, and I've been involved in shipping for 11 or 12 years at this point, and I think that's the most enthusiasm I've ever seen for a trade was with oil tankers. So it was an interesting time. Look, it's been a year, and we basically had the worst possible outcome for oil tankers. From if you were thinking about scenarios, and we were talking about this a year ago, you put out your bull case, your mid case, your bearish case. We basically had the worst possible thing happen, which is that OPEC did not continue their price war whatsoever. They were very constrained on their oil exports. They comply. I've never seen OPEC compliance like this. I never would have believed we'd have 110, 115% compliance from OPEC. I mean, that's unheard of. So that's one aspect. And another aspect is that it took a really long time to get past COVID. We're still not past COVID. Look, it's been an entire year, and just the headline on some of the news websites last weekend or this weekend was that Italy is going back in lockdown. The European Union doesn't have their stuff together, so the worst possible combination of things happened. So that's kind of the framing. I'm sure most of your listeners understand that. What's happening now, I think, is a lot more enthusiasm in some of the shipping sectors about the economy starting to reopen. We've seen that with product tankers. We have not seen that in crude tankers. So that's big picture of what happened, and then I'll look forward to your follow-ups.
Yeah, it's very interesting because I remember, a year ago there was so much enthusiasm that you were like the number one guy on Seeking Alpha, and I bet, right now it's not the case anymore.
Well, it depends on what topic, and if it's on oil tankers, yeah, there was a brief period of time, and it was brief. I mean, I think it was from like March of maybe 2020, mid-March, to maybe like May or June, where there was a lot of enthusiasm, a lot of page views. Maybe you've probably seen it too. Like, we do a podcast. There's probably a lot more reactions, a lot more listening. And that's it depends on the outcomes. And we have hindsight now. It's been a year, and things didn't turn out so well on average. Some stocks have done well, but not all stocks have done well. And with that hindsight and average, it's easy to look back and be like, yeah, maybe people were too enthusiastic. But that's with hindsight, right? And that's with knowing a lot of things, right? That's with knowing that COVID lasted an entire year, still ongoing. And that's with knowing that OPEC was extremely compliant with their cuts. I mean, if those two things had been different, if COVID would have been a 3-month or 6-month thing, and OPEC hadn't complied with their cuts, the oil tanker situation would have been completely different. So it's easy to look at it with hindsight and kind of miss some of the underlying dynamics.
You said that some of the shipping sectors outside of the crude are doing well, and then you said that product tankers are doing better than oil tankers. So why are there those differences?
Well, so first of all, we'll talk about the other segments, so outside of tankers. LNG shipping and LPG shipping both did quite well on average, especially last fall. Um, the LPG is used propane primarily for heating, so the heating demand didn't go away. In fact, in the United States, there's actually an increased demand for propane, both due to cold fronts making things colder, and also due to more like outdoor. You go to restaurants, you see the propane grills and stuff like that, keeping people warm. And then for LNG, that's used for power production and also for heating. So, across Asia, the demand for heating and for power generation went up year over year. So those markets were very strong. They were not impacted the same way tankers were. Another market that did really well and has actually been our bread and butter in terms of profits over the last year has been container ships. You think about lockdowns and all that sort of thing, and stimulus checks going out to folks. That incentivizes people to spend more money on disposable goods, electronics and consumer goods, upgrading their office a little bit, things like that. So container ships have done phenomenally over the last 6 or 7 months, and the gas markets did pretty well as well. The only sector that has really been in this vice grip, of COVID has been crude tankers. And that's primarily, I mean, we kind of covered it a little bit before, but that's primarily because the demand for oil has not recovered yet. And the supply from OPEC has been balanced. OPEC's done a pretty good job for the sake of the oil markets. But look, tankers are not about the overall oil markets. Tankers are about transporting raw volumes of oil. So if the raw volumes of oil are down, that's very bad for crude tanker markets. And we haven't seen any sort of demolitions or record disposals of assets yet. So, if your demand goes down and your supply stays the same, your prices are going to drop. And that's what we're seeing with tankers. So finally, I think you asked about the differentiation between crude tankers and product tankers. Product tankers, first of all, they weren't quite as oversupplied as crude. And second of all, as the economies start opening back up, as I know Europe is having a bumpy start, but they're starting to open back up. The United States is opening back up. I just saw a headline on Friday that said gasoline demand is at 99% of last year's levels. So, I mean, the United States is basically back open for business, regardless of what the politicians say, regardless of, debating about mass mandates and whatnot. Look, the United States economy is back open for business, 99% of last year's gasoline demand. So we're seeing those products, those diesel fuels, those gasoline fuels, veg oils, those sort of things are starting to move. So those have recovered. But look, crude is all OPEC, and OPEC is not yet releasing the oil. So that's kind of the differentiation. I know it's very simplistic, but look, products are the global economy opening back up, and crude oil is heavily, heavily dependent on OPEC.
But if people are back to driving, and I see that in my area, I mean, I'm on the street and I'm like, if I didn't know we had COVID, I wouldn't even see any difference. So if people are, driving and the gasoline demand is very much back up, isn't it kind of like a pipeline that the next thing that's going to happen is, positive environment on the crude side?
Yeah, I think that's absolutely right, Marius. I think that's, when you talk about investing, you talk about, first order effects, second order, third order. Yeah, look, I mean, the first order, is the economy opening back up and people getting out there and buying more gasoline, flying again, right? And we haven't seen the airline travel recover yet. That's kind of the next step in this equation. Driving is step one. Air travel is step two. And I don't think air travel is going to normalize for at least another 6 months, maybe longer, but that is a step two, right? And so that's kind of your first order thing. The next order is that products are going to have to start moving, and you're going to see increasing demand for MR tankers, LR2 tankers, that sort of thing. And we're already starting. The rates are still bad, Marius. Let's not get too far ahead of ourselves, but the rates are starting to improve. We're seeing green shoots in the market. The last couple of weeks, the volatility for the LR2 trade has increased a lot. And what that's telling us, that volatility in rates increasing, is telling us there's a little bit more pull, right? Pull for the product demand. So as that improves, eventually, I don't know how long, Mario, so maybe it's 6 months or 7 months or somewhere in there, but eventually the global stockpiles of oil are going to start getting drawn down. OPEC's going to see that, and OPEC's going to be under their own political pressure to turn the taps back on and boost up their exports. Once that happens, Marius, that's when those crude tankers are going to get back into a positive dynamic.
Interesting. You recently, I saw that you attended the 15th annual International Shipping Forum as one of the panelists for the Analyst Forum. I was wondering, like, what are you hearing in the industry? What's being said on these conferences right now?
Yeah, well, it was a good time to do the virtual forum. Of course, it'd be nicer to do it in person, but that's not practical yet. But what we're seeing right now is a lot of enthusiasm coming back to the stocks across the shipping sector. And in some sectors, it's very supported by the fundamentals. Like in container ships, we're looking at earnings that are 12, 13-year highs, and these are charter lengths of 2 or 3 years. These aren't just like spot rates. So we're seeing very, very strong fundamentals in containers. In tankers, it's more of a recovery play. But if you look at it, you pull up a chart, and we're recording right now, it's Sunday, but March 14th for those listening later, and you pull up a chart of like Scorpio Tankers, ST and G. And the product tanker rates are still, they're not very good. But if you look at that chart, you'll see a tremendous improvement in the stock price over the last couple months. First of all, the stock's overshorted, so that's kind of helped us out. But second of all, there's more enthusiasm coming back to the market. And I think that's what we kind of saw at the analyst panel. I think that all the different analysts, there was 5 of us total on this forum. We all had slightly different views on the market. We had slightly different, favorite companies and favorite sectors. But I think we all kind of noted that there's an improving enthusiasm for the global reopening and recovery trade, and shipping is a big part of that. So I think we're going to start. I think we're maybe like, I don't know. Baseball analogies maybe aren't the best, but I think we're in like the third or fourth inning of this sort of recovery and rotation trade, and we're hoping. We don't know what's going to happen, obviously, right? We'd all be billionaires if we knew for sure what would happen. But we're hoping that rotation recovery will continue through, June, July, August, and the rest of the year.
Talking about favorite companies, as you said, that different analysts have different companies. Like, what kind of companies are in your favorite bucket right now, both on the product side and crude side?
Yeah, I think it depends on your time horizon. If you're asking me what's my favorite company for a couple weeks of a trade, I really like the ones that are more oversold and heavily shorted. I think two of the recent ones in that case were Scorpio Tankers, which has kind of already moved, and TK Tankers. TNK is another one. It was way oversold and was very attractive. Now, if you're looking more long term, if you have the time horizon and the ability to sit there for I don't know exactly how long, but 6 months, 12 months, something like that. Then something that's super deep value and beaten down, like Diamond S, DSSI, that would be an attractive one. Now, if you're more of like, well, I'm not really into shipping. I don't follow it super closely. I want a high caliber management team that I can trust. I don't want to have to like daily, track this thing. I just want to buy shares and hold it for a year or two. Then I look at something like Euronav or International Seaways. So EURN for Euronav or Seaways for INSW. So there's kind of like your trading stocks. And I think like Sting is maybe more of a trading stock for me right now. And then there's sort of like your core investments. And I think INSW is more of a core investment. And just for disclosures, I'm talking my book, right? Because I own these companies. I to trade in these companies. I have a long position right now in Seaways, in DSSI, and in TK Tankers.
Okay, I remember. Tell me if you remember a few months ago uh, how among the bulls, even the bulls were so super bearish on one particular tanker, and it was the Scorpio tankers. So they were bullish on the whole sector, but they very much hated that one stock, and I just find it interesting that that's the one that, in terms of the stock price, performed the best over the last few months. Do you have anything to say about that?
Well, I think that's always going to be the case when you have one stock that everybody hates, and the market starts to recover and enthusiasm changes. I think the most hated stock is almost always going to be the winner, and I think the most loved favorite, like powwow stock, is probably going to be the loser. I mean, look, last year, what was the stock last year? Nordic American Tankers, NAT, and I mean that was like a fanboy favorite. I mean that was like the game. That was GameStop before we had GameStop, right? I mean, that's the first time I ever heard of Wall Street Bets was Nordic American Tankers, and look, that stock has been a complete turd, over the last year, and some other stocks that weren't so popular, like a Euronav, people actually are up on Euronav. Look, if you bought Euronav a year ago and you include the dividend payments, you actually made money on the thing, even though it didn't go so well, right? I mean, not you weren't ahead every day, but you made money, right? If you bought Nordic American Tankers at the top, you didn't make money. Same thing for Scorpio, inverse, right? Last fall, you hated the thing. If you were brave enough, to take a little position or you started trading the name, you're looking pretty good right now.
Yeah, talking about Scorpio tankers and TK tankers, I want to ask you about the balance sheet, because I know the TK tankers took the opportunity of when the storage was hot and the rates were hot to fix their balance sheet. And when I think of Scorpio tankers, I think of over leveraged company. And I was wondering if you could maybe comment on these two companies' balance sheets and whether you worry about the balance sheet for Scorpio tankers.
Yeah, Marius, I think that's a solid question. I think it's always important for investors, even for traders, but especially for investors, to look at the financial risks of these companies. We'll start off. I'll try to talk about both of them a little bit, but first off, huge kudos to the team at TK Tankers. They did an exceptional job last year of managing the market as well as they possibly could have. Look, when the enthusiasm started to improve, they signed long-term charters. They sold some of their older assets. They said, we're not going to pay a dividend. We'd like to, but we just can't. We have too much leverage. They did everything correctly. Like they get an A or almost an A plus for how they handled the market. And now you have TK Tankers with a huge cash balance. They're repurchasing some of their more expensive leases, and financially they're in great shape. Now, does that mean they're going to make a lot of money this year? We don't know. Right now, quarter one's going to be pretty ugly. Quarter two is probably not looking much better. So are they going to make a lot of money at TK? I don't know. But they're not going to have any sort of problems with financial covenants. They're not going to have any risk of dilution, nothing like that. So TK Tankers is in the clear. Now, Scorpio Tankers, this isn't so much because they did the wrong things, but the market was not strong enough long enough for Scorpio. They did not generate a lot of free cash flow last year. It was actually pretty underwhelming what they did. And it's not their fault. It's just the market didn't last long enough for them. And Scorpio has a very leveraged balance sheet. You called that correctly. And if rates do not recover, Scorpio is going to be in a lot of pain somewhere between late 2021 and early 2022. They have a big convertible note that's due in May of 22 that is really starting to concern me a little bit. So with Scorpio, you're making more of a bet. You're making a gamble that the product tank markets are going to recover. And if they do, you're going to be rewarded. You're going to make a lot of money with Scorpio, but it's a riskier bet, and you have to keep that in mind. TK Tankers, a lot safer, a lot less risk on the downside.
Thank you for that. And then the last question that I have for you is, before this COVID arrived, there was all this talk. I think it was starting 2018 when it was starting to look like a new bull market, super cycle, however you want to call it. Do you have the view that after we get over this COVID and return to normal, that the industry would return towards that bull market or super cycle as they call it?
Yeah, I mean, the strong cycle or weak cycle is all about supply and demand. So that's really all it is. It's your demand for ton miles of shipping the oil around the world, and it's the supply of vessels that are on the water. So to get a super cycle, you have to have a long-term bullish run, strong run in demand. At the same time, you have to have very constrained, very low future supply. That means not very many ordering of new ships, a lot of scrapping of older vessels, and so forth. So one of the reasons we were so optimistic about the market was because of all this new regulation. There was a lot of new regulation. The global economy was very strong, and there was not a lot of supply growth. So it was like the trifecta. Things were looking great, and we saw that in 2019. We had a phenomenal year. A lot of people forget that. Oil tankers had a phenomenal year in 2019. And honestly, Marius, when you look at International Seaways 2020 performance, Euronav's 2020 performance, DHT Tankers, Okeanis Eco Tankers, you look at all the big crude tanker companies in 2020, they had a hell of a good year. It's easy to forget that. They had a really good year despite COVID. Now, you asked me, am I bullish on the market going forward long term? And we have to have the same three things. We have to see the regulatory pressures, which I believe we are, and I believe we will see. We have to see global demand fully recover, and we're not there yet. United States might be 99% gasoline, but look, jet fuel is still like 60%. So we have a while to go. And a third thing is supply. We have to see old vessels be demolished. We have to see owners be against new builds, right? We can't see a lot of new builds, and we have to see a lot of demolitions. And Mars, I haven't seen a lot of demolitions yet, and that concerns me. And so if there's anything I'm concerned about, it's the lack of demolition. If we can get a lot of demolitions this summer, this fall, I'm going to be a lot more optimistic about 22 and therefore.
You went on mute.
Oh, that was the end of it. We're just looking for more demolitions.
Okay. Thank you, Jay. This was fantastic. Great catch up. Is there anything else that you would like to add before we finish?
I think one thing, thanks again for having me on. I think one thing with tankers is it's the same for any other volatile, aspect of the industry. If you're going to make an investment in one area, try to diversify a little bit, right? Don't just go with one company. Maybe pick two or three that you like, and be cognizant of your allocation to that sector. If it's just a trade, if it's just a bet, maybe that's 5% or 10% or 15% or whatever it might be. I can't give investment advice and allocation and that stuff, but I did see a lot of folks last year that got super enthusiastic about a trade, And I see some folks saying they put like 50% of their money into this thing. And I just encourage everyone to be more careful and spread things out. And look, shipping is a very volatile industry, but there's a lot of opportunities for profits. I mean, last March to last May, most of those tanker names had doubled. If you bought the tanker names last March and it's been a year, in fact, I'm going to put out a report in a couple of weeks talking about basically tankers 1 year later. But if you look at tankers 1 year later, March 2020 to March 2021, and you bought the high quality names, you did very well. As long as you didn't get emotional, you didn't get overextended. Same thing on the bearish side. A lot of folks, they bought all the stocks in April and May, and they dumped them all in like September, October. I mean, it was like they top ticked the buy and they bottom ticked the sell. And I hate to see it. And I've been in the sector for 12 years. It happens all the time. And I just hope folks will take a little bit more, patience, look at the sector, look at the long term, and stick with their investments.
For those folks that are interested in learning more about Value Investor's Edge, I believe that's what it's called, how can they find out about it?
Yeah, thanks for asking. So first of all, the easiest way is follow me on Twitter at Mintzmyer, Mintzmyer. And if you're interested in more deep value research, then the website is www.mintzmyer.com. And that'll land you directly on the page for our research. We have 2-week free trials available. So if anyone wants to jump on and see some of our latest reports and some of our models, you're more than welcome to. So yeah, thanks for asking, Marius.
Perfect. Thank you very much for your time.